A very quick one with Choma Udu from FMDQ Exchange Places, a fixed income dealer at GT Bank, giving us the opening calls on Nigeria's debt market this Wednesday. This is a midweek look into how things are shaping up on Broad Street. Choma, good morning. Welcome to the program.
Thank you for having me. Welcome.
Great.
Happy New Year, Boisson.
It's good to see you. You're smiling all over that. Is that how the yield curve is looking today? Is it a smiley one?
Well, we have a lot of liquidity in the money market. We opened today over 500 billion long. As a result of that, we've seen rates at the money market trade at 2%. We've seen a lot of interest at the short end of the TB curve because of the low rates in the market. We've seen people try to just reinvest those the TB curve, which is currently trading at 10%. But save for the funding for FX, we've not seen a lot of activity in the money market.
Great. Any thoughts on the currency side? What do you think the rest of the, not before the currency, what exactly is the financial regulator, the central bank, doing as far as the primary market auction is concerned? What's on the radar?
Okay, for primary markets, that's the T-bill, if we move back to the T-bills. For primary markets, we still have that restriction for locals and individuals to participate at the OMO auction. So we've seen a lot of pressure at the primary market auction where it is at a low of 3%. But going to the foreign exchange, we've seen a lot of liquidity coming to the system. From the highs of 366 to $1, we've seen rates trend out to 363, which is a good sign that we're going to see more volumes coming into the space and more happening during the year.
Interesting. So the last point is about currency conversation. Any idea how the current liquidity position will impact currency action around the I&E window? Choma?
We've seen investors, we've seen interest from the investors opening this year. We saw liquidity flow into the system. Rate is currently at 363 levels. And with the oil price at about $70 per barrel, it's a strong bias for us that we're going to see more interest from the investors to us. And then with CBN keeping the OMO rates at about 13%, with a yield of 15%, we expect that we're going to see more interest, coupled with the fact that the central bank has continued to intervene in the various windows. So there's FX liquidity in the system as we speak.
Choma Udu, thank you so much. Is there any idea that the external issues around the tensions between the U.S., Iran, the Middle East, are we hearing anything on the market street about if there are any concern from investors? Are you hearing anything?
We haven't heard any concerns. I mean, for us, it's a plus because oil prices dollars per barrel, where we have our budget cut at 57, so we have a surplus on the budget. However, with the interest rates in the interest rates as low as 1%, 2%, it's a positive carry for investors to come into the Nigerian sovereign to invest. So we're going to see a lot of FX liquidity, which makes our Naira in the long run more valued. So we expect that rates are going to be stable around 362, 363 levels in the meantime.
Choma, I'm sure we're going to get together for another conversation in the next few days. Thank you so much. Let's leave it there for today. You got to get back into the dealing room. Choma Udu from GT Bank, fixed income dealer, live to us from FMDQ Exchange Place.